Welcome to the Real Estate Way to Wealth and Freedom podcast with Jacob Ayers, providing actionable content to help you along your journey to financial freedom through real estate investing. As the premier asset class, real estate has helped ordinary people just like you amass fortunes. The benefits of passive income from real estate investing will allow you to live a life you want. And now your host, entrepreneur, real estate investor, and apartment deal syndicator, Jacob Ayers.
Hi, and welcome to the Real Estate Way to Wealth and Freedom podcast, episode 44. Today our guest is Ty Crandall. Ty is an internationally known speaker, author, and business credit expert. With over 17 years of financial experience, Ty is recognized as an authority in business credit building, business credit scoring, and business financing. Ty is the author of two best-selling books on consumer and business credit, Perfect Credit and Business Credit Decoded, and has written hundreds of published articles relating to business credit. Ty is also often heard being interviewed on countless radio and TV programs and news shows across the country, and has been featured in Forbes, Entrepreneur, and Inc. Ty currently serves as the CEO at Credit Suite. With Credit Suite, Ty consults with and advises companies on business credit building and scoring. He has overseen the business credit building for thousands of clients and has helped create and grow the most credible business coaching operation in the U.S. Ty has also created and coaches the largest business credit provider network in the world. Ty is an avid pilot and sailor, spending much of his free time in the skies and water around Tampa, Florida. His favorite pastime is spending time with his family and playing with his two kids. Today I'm excited to bring on the show Ty Crandall. Ty, thanks for joining us today.
Hey, thanks for having me. I'm excited to be here.
Absolutely. We're looking forward to it. So Ty, we've got you on the show today to discuss business credit. Can you tell us a little bit exactly about what business credit is and how it can help real estate investors?
Yeah, absolutely. Well, business credit is, you're obviously familiar with consumer credit. You know, you have a credit with TransUnion, Equifax, Experian. You started probably with nothing. You built a credit profile that's linked to your social, and then you use that established credit profile to get credit cards and loans and real estate and auto financing. Well, what a lot of people don't know is that businesses do exactly the same thing. So businesses have their own credit profile that's linked to the business EIN number, and once established, that corporate credit profile can be used for much the same thing consumer credit's used for. It can be used to obtain loans and credit cards, commercial real estate, even auto vehicle financing in the business name. So a lot of benefits that business credit provides the real estate industry, including it gets investors the money they actually need to buy properties, and it gets them also the money they need to rehab properties. Because, you know, it's very common to get $20, $30, even $40,000 individual limit credit cards fairly quickly in the business credit world at places like Home Depot and Lowe's and Sears, where a lot of people that are doing fix and flips are buying, you know, supplies and tools and everything they need for their trade.
Yeah, awesome. So are these kind of similar terms of credit in terms of business credit versus your consumer credit? Can you expect kind of the same terms and conditions, or is it drastically different?
Well, you know, most reporting on this shows that commercial credit cards have a little bit higher interest rates than what you're going to find on the consumer credit side. So the interest rates are a little bit higher on commercial credit cards than consumer credit cards, but the limits are substantially higher. So, you know, in the consumer side versus the commercial side, I think SBA reports that about 10 to 100 times the limit of a commercial credit card versus a consumer. So we see people getting $10, $20, $30,000 credit card limits within about 2 to 6 months in the commercial credit world, whereas in the consumer world, it would take, you know, a long time, 5, 10 years plus to establish that. And that's just because one of the core components of credit is called capacity, and consumers don't have as great of an appetite or need for capacity than the businesses do. You know, you're never going to spend 10 grand at computers at Dell for your home ever, but
Right.
You know, for the business, you could blow past 10 and get to 20, 30. So commercial credit cards, they just understand that you have a greater need for capacity. The limits are substantially higher, and the rates are a little bit higher as well.
Okay, yeah, that makes sense. So one of the differences between consumer credit and business credit is what they're tied to. You said consumer credit is tied to your social security number. Business credit is tied to your EIN. Can you tell us exactly what an EIN is and how that all works?
Sure. Yeah, really your social and the EIN are both identifying numbers to the IRS in our country. So your social security number is how the IRS recognizes you as an individual. It's issued to you from the minute you're born. And the same thing with an EIN. The EIN is how in our country, the IRS recognizes your business. And typically it's the second step after you actually come in and you get your actual entity set up. So once you actually set up your entity, you choose that you want to be a corporation or an LLC or whatever entity you choose, then the next step is that you're coming in and you're getting what's called the employer identification number, or the EIN, which again is just what it sounds like, the employer identification number. It's the way of the IRS identifying your business as being a credible business in this country.
Yeah, right. That all makes sense, Ty. So a lot of one of the walls that real estate investors are often faced with is they're capped out on how many Fannie Freddie loans they can take out at 10, and then after that it gets dramatically harder. So how can an investor use business credit to increase their capacity to lines of credit and other forms of credit?
Well, there's a few different things to consider. I mean, first of all, anybody that owns a business doing anything, business credit's as important to your business as your consumer credit is to you as an individual. It's something just like an individual, you can ignore your personal credit to a certain point in time, but then when you need the mortgages, when you need auto loans, you get to a point where at some point in your life, you really need the credit. It's going to need to be something you're going to depend on, or it's going to be a really tough struggle moving forward. It's the same thing in the business credit world. It's not just being able to get business credit cards. It's that whenever you ever want to get a loan to expand your business or a credit line, your business credit is reviewed, it's looked at. Now, a lot of people don't know this because in the consumer world, if you're ever denied for a loan, the Fair Credit Reporting Act says you must be notified. So you get that notification saying, hey, look, we pulled your Equifax report and here's what we didn't like. But there is no Fair Credit Reporting Act in the commercial world. So when you go in and apply for a business loan, credit card, or even credit card at your bank, they are pulling your business credit, and your business credit quality will determine whether you get approved or denied, how much you'll get approved for, and the rates and terms you pay. So if you're in the business of real estate investing, you have a business. And when you start to get past 10 plus properties, that's a pretty good size, legitimate business that you have. So at that point, you have to really consider the building a commercial credit, because it's only right around the corner that you're going to need to start considering business lines of credit, business loans, revolving credit cards to help you grow the business. So business credit can help you in a lot of ways. It can get you Visa cards and MasterCards for 40, 50,000 plus that you could use to even buy properties with. If you are doing fix and flips versus, buy and hold, then you're buying all the stuff at Home Depot and Lowe's and Sears, and you're using labor and all these things that individual commercial credit cards can actually help you get the money for. So again, if you're buying a property to hold or you're doing a fix and flip, you're still investing a lot of money into that property. And that's money that you're either going to take out of your pocket or you're going to get another way. Commercial credit cards can help you get that. They can also help you get the money that you need to buy the property. And it also gives you the established credit profile and score you need for higher limit loans and credit lines, which could help you, again, be used to purchase more property, especially when you exceed the cap of what Fannie and Freddie has.
Yeah, that sounds really powerful. So some people out there, Ty, might be thinking, well, Ty, I don't even have good consumer credit. How am I supposed to get business credit? Can an investor get business credit without a personal guarantee on that?
Sure. Well, that's one of the benefits of business credit is that it's not linked to you as an individual. We kind of get conditioned in this country to give our social when it's asked for on credit applications. But the reality is that once you start to establish corporate credit, then you don't really need to do so. Your business guarantees are required because your business doesn't have the credit to stand on its own. And if you look at the definition of a personal guarantee, that's exactly what it is. So ultimately what's happening is you're providing a PG because your business doesn't have enough established credit to go without the PG, right? Like you and I both know Michael Dell isn't sitting there filling out applications for Dell and giving it social for
right. Yeah.
Right. I mean, we know it exists, but we think it's just because Dell is Dell. But what really is happening is if you pull Dell's commercial credit report, you'll see why they get approved without him being needed, because they have credit lines. They have tons of trade lines on it. They have high limit revolving accounts. They have high limit loans. So they've built their commercial credit just like the little guy can too. And once that's done, as you start to establish more credit, you start to have more options without the personal guarantee. So it starts with little vendor accounts that you get without a personal guarantee. And then as you get some credit established, you start to get the Home Depot, the Lowe's, the Apple, the Dell, the Amazon, the Walmart, all those without the guarantee. Then you get fleet credit cards to get, fuel and auto vehicle repair and maintenance without a guarantee. You can get auto vehicle financing next without the guarantee. Then you move into Visa and MasterCards without the personal guarantee. All of that could be done without a personal credit check. It's not even looking at your personal credit. So no matter how bad your personal credit quality is, you're still able to get $20,000, $30,000, $40,000 limit cards for your business, and none of those require a personal guarantee. As you start to get into higher loan amounts, 100 grand plus, well, then they're going to look at more facets of your business. They're going to look at the employees you have and the size and the revenue and your financials. So business credit won't be the only factor when you start to get into higher limit loans and credit lines, but it is definitely a determining factor of whether or not you'll get approved or not.
Really going back to that capacity to pay, really, right?
Really, I mean, that's exactly what it has to do. And you know, that's what I like to say to anybody I talk to that's looking for money is they say, look, I want $250,000. Who will give me a loan for $250,000? Well, you're asking the wrong question. What you want to do is you're better off to focus on 5 sources that will give you $50,000, which is much easier to get than one that will give you $250,000, right? So that's the way I look at it is when we talk to clients, we always say, what is it you're trying to accomplish? Well, I want $250,000. Well, then let's figure out the best and easiest path to get you the $250,000. And in a lot of cases, it might not be through one loan because the scrutiny you're going to have to go through to get that $250,000 from one source is substantial. They're going to look at your bank credit, how much you keep in your bank account and your revenue, and they're going to look at your profits and your tax returns and projected financials, current financials, your personal financials. All these other things come into play. Whereas when you use smaller amounts and kind of use them to build up to what you need, it's just much easier to qualify for.
Yeah, okay, that all makes sense. So Ty, assuming somebody is to the point where they want to start building their business credit, how do they go about doing so?
Well, there's a couple different ways to initially get started. I mean, the first thing is you need to have an entity set up, right? So you're better off to choose a corporation or an LLC because with those, you and the business are separate from each other. When you start to choose sole proprietorships and partnerships, you and the business are one and the same, which means if you and the business are one and the same, you'll always be personally liable. Even if you get credit without a guarantee, they can still sue you because you and the business are one and the same.
Right.
I'm not an attorney, but the same thing happens with lawsuits as well. When you and the business are one and the same and the business gets sued, you can get sued. Your personal assets come into play, not something any of us want. So corporations, LLCs make sense. So you find your business name, you set up the entity in your state, preferably an LLC or a corporation, right with your Secretary of State website. And then you just set up the foundation of a credible business. You know, you got to make sure that you have a website and a professional email address, not a Yahoo or an AOL type address. You want to make sure that you actually have any licensing that you need for your industry if you need it. You want to have a business phone number. You don't want to be using your mobile phone on business applications. You want to try to get a physical business address or a virtual address, but you want to try to keep your home address off those applications as your business because, again, a real commercial address just makes you look more credible. So the way I describe it is in the very beginning, every line item they're asking for in an application becomes important. And when you fill that out, you need to ask yourself, is what I'm putting here reflect that I'm credible? Now, if you're putting a mobile phone, you know it doesn't. If you're putting party dude 2017 at Yahoo as your email, like you know that's not credible.
Yeah,
So
right.
once you build that credible foundation, the next thing you need to do is you need to get credit that reports to the business credit reporting agencies. And there's really 2 ways to do that. If you have good personal credit, then you can get accounts with a personal guarantee right off the bat that report to the business credit reporting agencies. We work with financial sources that will get clients 5 to 8 of these kind of credit lines. So somebody can get up to $150,000 in unsecured financing. It's credit lines where you could physically take out the cash. They report to the business credit reporting agencies, but you need about a 680 credit score to get approved. If you have it, fantastic way to go because you can get these cards at 0% rates. If you don't have the good credit or don't want to supply the personal guarantee, then the alternative is to use what are called vendor accounts. And these are accounts at places like Uline that sells shipping supplies, Quill that sells office supplies, Granger that sells outdoor kind of working equipment and tools. And these companies have something really in common. They first will give you credit even when you have none, and they report that credit to the business credit reporting agencies. So you can go to Quill, put $50 worth of stuff in your shopping cart, check out, choose invoice me, not even give them a credit card, and they ship those items to you. And even though there's no big celebration or big email they send saying, hey, congratulations, you got this huge line of credit, they just issued you credit. And what happens is once you pay that bill, they report that credit back to Dun & Bradstreet. And once you have about 5 of those type of accounts reporting, then you can move into the high limit store accounts, the Apple, the Chevron, and Amazon Amazon and the Shell and Exxon, Costco, Sunoco, Sears, Sprint for phones, Best Buy, BJ's, AutoZone, Dell, Wex, Pitney Bowes. Almost all major retailers offer revolving credit. And when you have about 5 accounts, you can start to get approved with those. The key is that leave your social off the application at that point, because you don't want them to pull your social. You don't want to provide a personal guarantee. You want to force them to look at that already established business credit that you have. And once you have about 10 of those accounts, well, then you're kind of the final step. You can start to get the fleet credit we talked about. You can get auto vehicle financing at places like Ally and Ford and GM. You can start to get Visa cards and MasterCards, all of which without a personal guarantee and a personal credit check. You just need about 10 reported trade lines to get there.
Yeah, okay. So what I'm really getting at is business credit certainly has the ability to expand one's use to more credit, more leverage, and more opportunities to grow their business, essentially.
Well, look, most of us are all guilty of using our consumer credit to fund our business.
Oh, absolutely.
And the problem with that is that it's not designed to do so. So consumer credit, it doesn't have the capacity commercial credit does. So when you try to use it for the purpose that it's not intended for, you really damage your scores. And a perfect example of that is the consumer FICO score. 30% of the score is based on what's called utilization. What percentage of your credit limits you're actually utilizing. And anything that you use can lower your scores. Even you really want to stay below 1 or 2%. If you look at experts like John Alzheimer that talk about this subject, when you get to 20, 30% utilization, you really can hurt your scores. And since 35% of your FICO's payment history and 30% utilization, when you overutilize accounts, you mathematically damage your score almost as much as if you're paying your accounts late. It's very severe. So people that are trying to use consumer credit cards to fund their business see this happen all the time. The problem with that is they're lowering their consumer scores, and they hurt their ability to get mortgages, to get the best rate on those mortgages, to get business loans, to get the best rate on those business loans. So preferably you want to keep your consumer credit safe and separate the two. And this is where if you look at what SBA and Inc. and Experian and D&B and you look at Score, any financial authority out there all says the exact same thing. You need to separate commercial and consumer credit for this exact reason, because consumer credit wasn't designed to fund a business. And if you try to let it do so, then you're going to damage your consumer credit scores. And the things like personal car loans, personal mortgages, the mortgages with Fannie and Freddie that you're buying to flip, the business loans you want to get, your chances of getting all those things are severely damaged if you're trying to use your consumer credit to fund your business, because you crush your scores when you don't need to.
Yeah, okay, that makes a lot of sense, Ty. So let's kind of switch gears and dive deeper into how specifically real estate investors can use business credit to grow their business, acquire properties, and maybe one of the avenues that you mentioned earlier, flip properties. Can you talk about how an investor can utilize business credit to do those kinds of things?
Well, part of it's business credit and part of it's alternative financing as well. So, business credit can be used for a lot of the things that we've kind of briefly discussed. It depends on what you're trying to do. If you're trying to do a fix and flip, then you need tools, you need drywall, you need fans and lights and fixtures and all these things to do your fix and flip. Well, every one of those things you buy, you're buying from a place that you can get a commercial credit card to buy it, whether it be Home Depot, Lowe's, Sears, whether it be Amazon or Walmart. All of them offer the $10,000, the $20,000, $30,000, $40,000 limit credit cards without the personal guarantee and without the personal credit check. So if you're doing fix and flips and all of a sudden now you've got a $40,000 Home Depot and a $30,000 Lowe's and a $50,000 Sears and another 40 at Amazon, well, all of a sudden you freed up all of your working capital, because now you have commercial credit to buy all those things with low minimum payments that you could pay until you flip the property. So it frees up your cash flow tremendously, of which you can use that cash flow that you freed up to even purchase more properties. So getting what you need to do the fix and flips, if you're buying and holding, you still need those things. You put somebody in the property, the plumbing burst, you need to fix the plumbing. You need to do this. You need to have labor and people come in where you could use labor ready to fix things. So even if you're holding the property, there's still a lot of things you need to buy. Air conditioning unit goes out. Those are things that you're either going to use your personal money for, you're going to use your cash flow that you could be using to buy other properties, or you're going to use this established commercial credit to buy and keep your cash flow and credit intact to use for the things that you need, such as to buy new properties. So that's some of the idea of how you could do it. But again, you can still use use that unsecured up to $150,000 at 0% to buy your first properties. So, if you have down here, you can still get $50,000, $60,000, $70,000 properties to flip. So if I come down and I get $150,000 in unsecured financing, build my initial business credit, now I can buy 2 or 3 properties with that money, use my Home Depot, my Lowe's, my Sears, my Amazon, my Walmart to get all the supplies I need to fix and flip those properties. And boom, I've got those properties back on the market, all using commercial credit to do so. And again, as you build the business credit, then that opens up even more Visa cards, MasterCards, American Express cards that you could use to physically even take cash out on, but you again can continue to use to purchase more real estate. But there's a lot of alternative financing options out there as well. If you have a 401k, or if you have stocks or bonds, or you have account receivables, any of those type of things, or you even have consistent revenue going through your business, then all of those things open up alternative loans that can help you get money to buy properties as well. Loans that you can get in 1 day, 2, 3 days, credit lines that you can get, a lot of which aren't based on your consumer credit. They're just based on your strength, whether it be that you have that collateral or you have consistent revenue, or maybe your strength is that you have the good credit. So there's a lot of alternative financing. There's even programs called house reseller programs, which are designed for fix and flip. They're 8% rates. They're 6-month loans that are designed for real estate investors. And you can have multiple of these out at any given time, where you can actually get the money and get basically as much as 100% of the money you need to buy and rehab the property, as long as you don't exceed 65% of after repair value. So it's a combination. You want to use business credit to do the things we talked about. Then there's all these alternative loan options that could work for you as well to be able to get money to fix and flip or buy and hold.
Yeah, okay, Ty. Well, you're opening up a whole new world to real estate investors right here, and a lot of information, almost making my head spin. So let's recap a couple things that I want to kind of dig deeper in. So let's take this flip scenario. So we've got our business credit where we can go to Lowe's, Home Depot, buy our materials. But what about things like labor and some of our intangible holding costs like property taxes, insurance? Are there opportunities to use business credit for those types of things? Because those are much harder than I see. You can't pay, Joe's Plumbing with, the swipe of a credit card sometimes.
Well, that's exactly why I like to say that whenever you think about how much money you need, you really need to break it down into what you need the money for. Because you're right, you can't use a Home Depot card to pay a contractor, right? So, but if you need 20 grand and 15 of it is for supplies and 5 is to pay the contractor, just by having the Home Depot, now you no longer need 20, you only need 5, right? So, first look at what you need the money for. And then you're going to realize that just using store credit cards, in a lot of cases with fix and flips, covers 50 to 75% of what you need, because 50 to 75% of what you need to do the rehab is supplies, it's tools, it's the materials that you could actually buy at these locations. Then that leaves you with the smaller chunk to cover, which comes down to, for example, in this example, contractors, labor. Well, you can use sources like Labor Ready and actually get business credit with Labor Ready and use things like that to get the labor. But more than likely, educated people that do fix and flips have their own contractors. Well, with those cases, some of them you can pay with the Visa and MasterCard cash credit cards. Others maybe accept check or cash. Well, you can cash out these Visa cards, MasterCards, and have the physical cash to pay them as well. So you've got places like Labor Ready that you could use. You've got Visa, MasterCard you could take the cash out to get. You have programs like the House Reseller program, which you actually releases money even in draws to pay the actual contractors as they do the work. Or you can use a 401k or your consistent revenue or the fact that you have stocks to get a working capital credit line where you could use a debit card and pay, or actually write checks out of the account, or get the physical cash to pay. So when you look at a combination of all these things, then you could pretty much cover almost every expense that you're going to incur when you're doing either fix and flips or buy and hold.
Okay, yeah. So there are many opportunities for you to access different lines of capital to pay for different things that may arise.
Right. Yeah. And that's the best way to look at it, because again, I think one of the biggest mistakes that people that seek capital have or make is that they're looking for all the money in one place. And you just can't think like that. You have to think of how much do I need? What do I need it for? And then look at what you can get the money for in those areas. When you do this, you're better off to then all of a sudden take what you might have put on a credit line, put it on the Home Depot commercial card, and now you free up all that room on your credit line to buy things you couldn't use the Home Depot commercial card to buy. qualify.
Yeah, okay. So Ty, one strategy many real estate investors use are putting maybe only one single property in an LLC each. So say they have 10 properties and 10 different LLCs. Now, some people may have all 10 of those LLCs in a holding company, maybe not. Are there any kind of implications to that structure when trying to apply for different business credit? Do you see any kind of pros or cons to that strategy?
No, I definitely don't think there's cons to it, especially if you have one umbrella company or one that you're building business credit with. You just have to keep in mind, you've got to set up that business credible. You've got to have a website. You have to have the phone number. You have to have the address. So, if you wanted to build business credit for 10 LLCs, you have to do that times 10. Or maybe you just choose one LLC and to do it with that one business, and then you only need to do it once. So the only really repercussion on the business credit side of doing it that way would be if you wanted to build credit for all 10 entities. Well, the good thing is you get 10 times more credit, but the sacrifice, right, is that you'd have to then buy the things to make all 10 of those separate entities credible.
Yeah. Okay. Yeah. Makes a lot of sense. All right, Ty. And one other thing that you mentioned a $150,000 loan, 0% interest. Sounds like a phenomenal loan product. Could you kind of dive into the details of that and what that looks like?
Sure. Well, first of all, it's what it is it's not a loan. It's kind of like a hybrid credit card and credit line program. And This is what I mean by that. We go back to the strategy that, look, you're not going to usually get the one big chunk of money from one source. So when you walk in and you have a high credit card limit of $10,000, nobody's going to give you 100 because all you've shown you can pay is 10. Now you might get 11, you might get 12, but usually this is what we're used to. If we have a credit card limit of 10 grand, we don't usually go to Amex to get a new credit card and then give us 20. They usually give us a limit somewhat close to what we already have. Well, that's exactly the same way this program works. Is you're going to basically get 5 to 8 different credit cards that have limits very equivalent to what you have now. If you have a limit of $10,000, well, then you're going to get about $50,000 to $80,000 with these cards. If you have $20,000, well, then you're going to probably get $100,000 to $150,000 with these cards. So you're going to get 5 to 8 cards with $10,000 or $20,000 limits, whatever limit is equivalent to what you have now. Okay, so the good thing about this is that first of all, you have multiple accounts now, and those accounts all report on your business credit reports. And in our world, the commercial credit world, the number of accounts you have reporting, or what we call trade lines or payment experiences, is what matters most. So a lot of people think that you need to be in business 2 or 3 years to build business credit. That's not the case at all. What they're really looking for is number of trade lines you have. So this solution gives you 5 to 8 commercial trade lines to help you build your established business credit. Plus you get the 50, 80, 100, 150,000 in real usable revolving credit. Now, most of this credit has 0% rates for 6 to 18 months and then normal credit card rates after that. But the hybrid aspect comes in what they call liquidating the cards. So you can then, once you secure these, and again, we work with a bunch of different financial sources that this is all they do is help people obtain this kind of revolving credit. And so once you get approved, they then help you liquidate the cards, which is to take the physical cash out, all of it if you want it all out, or a portion of it if you want a portion of it out. So now you get the best of both worlds. You get the 0% rates that you only find with credit cards, not with credit lines.
Yeah.
And you get the cash out capability that you get with credit lines that you don't have with credit cards without paying the 20%. So you literally can take the 50, 80, 100, 150,000 cash out to use to buy real estate, right? Because you can't use a Visa card to buy a house, and you get it at 0% for the 6 to 18 months.
Okay, yeah, okay. So now I'm starting to understand. So these are kind of introductory periods on these credit cards, kind of like what you see in the consumer world. Is this a one-time use kind of thing? After you use this, introductory period, are you back to, your standard consumer kind of rates with credit cards, your 22, 24%, and you no longer have access to those cash credit lines? Or
you have access to the cash, you just don't have access to it at the 0% once that introductory rate, which makes sense because credit card companies, what they're trying to get you to do is to use the actual card, get used to using it, and then your interest rate goes up. They have to make some kind of money in return, right? Which is the interest rate. But then again, they all come with points as well. So, you're using it to buy real estate. You're getting points for airline miles or for stuff you buy in stores or all those things back. In a lot of cases, you're getting even cash back. But yes, and then the financial sources we work with to help with these type of programs, then when that expires 6, 12, 18 months down the road, well, you'll still have access to those cards. And if you want to get 5, 8 more, then we go through the process of getting you 5 or 8 more to start the 0% all over with even newer accounts.
Yeah, okay. Well, awesome, Ty. So let's kind of recap from the beginning. So in order to have business credit, you obviously have to have a business, which is a business entity, an LLC or a corporation like you mentioned. And then you have to have something to tie that business to, an EIN. And that, if I'm not mistaken, is an employer identification number. Is that correct?
Yeah, that's correct. The employer identification number.
Okay, right. So you have to have something to tie that credit to. And then you can start building this business credit through the avenues we've talked about and use it through creative strategies to do whatever it is that the business needs to grow the business, have access to capital to essentially grow your business. So those are kind of the steps one's looking at and getting started, right?
Correct.
All right, Ty, well, you're certainly no stranger to this. You actually are the CEO of Credit Suite, as we mentioned earlier in the show, and you've been helping people with business credit, expanding their means to grow their business for quite some time now. So could you talk about how you're helping those people at Credit Suite and what kind of services you offer there?
Well, what we do is help people through this process. What we find, the problem that we were actually created to solve is that there's a lot of access to capital out there that people just don't know about. So when I stand in front of large audiences and I ask, where would you go if you need money? The default answer is my bank. But banks deal with conservative risk. They have to. And it's easy to kind of paint the banker as the bad guy, but they're government insured. They have to focus on conservative risk. And the statistics show that business lending is very risky. So all they're usually doing is issuing SBA loans, which are very hard to qualify for. But what a lot of people don't know is that there's house for seller programs and programs you can use your collateral to qualify for, and literal credit lines you can get with rates less than 1%. There's all this money that's out there, but it's all with these different type of sources that usually only offer one or two programs. So what we do is pull it all together into one place. We work with every legitimate type of business financing program that's out there. We work with thousands of different lenders and investors. And this way we can sit with somebody and say, what is it you're trying to do? And then piece together all the money they may need. If they can get an SBA loan, we help them. But if they can't, then we still have 20, 30 different alternative programs that we might be able to help them with to get accessing with credit lines and loans, most of which they didn't even know existed before they actually came to us. And then, of course, we help build business credit for their EIN that's not linked to their social. And what I like to say is we just take what would take them years on their own to kind of figure out, and we just condense it down into months to make it easy and fast for them to build business credit. And then we help them get, save $2,000 on credit monitoring a year and, get their phone number listed with 411 and save the $400 a year that cost. And all these other expenses they typically pay, we roll a lot of those right into what we do and we cover those for them. So it's actually about the same, sometimes even cheaper to work with us than try to do it on their own.
Yeah, absolutely. And Ty, you've actually written a couple books that address a lot of these questions people have called Perfect Credit and Business Credit Decoded. So along with those, what other kind of resources are out there that our listeners could go to start kind of getting their feet wet with this business credit world and learning a little bit more?
The first thing to do is go to a link, creditsuite.com/EIN. And if they go to creditsuite.com/EIN, they'll get a really detailed guide that maps out the exact steps to build business credit in order that they need to follow to make sure that they set up their business credibly, get set up with the reporting agencies, and go all the way through to actually getting Visa and MasterCard credit. And that's at creditsuite.com/EIN. But on our main page, creditsuite.com, at the top right are our social media links. And if anybody looks, they'll see we are very active on social media. I do live periscopes and Facebook every single week where we map out all different kinds of things. So for example, this last week, we just talked about 20 different ways to get money for your business, even if you have bad credit. And these are the type of topics that we talk about in our live streams. And then they'll find links to our places like our YouTube channel. And our YouTube channel has literally hundreds of videos that map out the steps to get business credit, how business credit scores work and how the reporting agencies work and all different kind of loans. And we just did one last week of 15 different ways that real estate investors can get money to invest into real estate. So that's the kind of resources they'll find on our social media links at the top right of our page they can access at creditsuite.com.
Yeah, Ty, I know you guys are constantly putting out a ton of great value for your audience through your social media and through your website. So we'll certainly link those in the show notes so that our audience can go there for more information, as we highly recommend. So Ty, as we're wrapping up here, what kind of parting piece of advice or guidance do you have for our audience?
Well, the couple things. First of all, you need to separate your commercial and consumer credit. If you don't, it's really, really dangerous. You become personally liable for everything you're doing in the business. And there's no reason for that. It wasn't designed to be that way. Business credit, commercial credit exists for you to be able to use your business to fund your business, which is something all of us want to do. A lot of us just didn't know there was a solution. Now you do. So look into it. Whether you work with us or even take our free information and do it on your own, just make sure you take action to separate that liability. And secondly, importantly, don't let a lack of access to money be a barrier to get into real estate investing or hold you back from getting the properties that you know are good deals. Just get educated. Like I said, even on our YouTube channel, we just did, 15 ways to get money for real estate. It's not just us. There's a lot of resources out there and a lot of information that can teach you all kinds of financing that's available that you can access and tap into as a real estate investor. So be wise. Know there's a lot of access to money out there. You just need to do some research to find access to the best source. Of course, we can help you with that as well. And the other thing is build your business credit. Separate that liability. It helps you get the money you need to fund your business, and it helps you separate your personal and business liability.
All right, great, Ty. Well, as we're wrapping up here, where can our audience learn more about you and connect with you if they have any other questions?
The best place is go right to our website, creditsuite.com. And there we just have a treasure trove of information on loans and business credit and all different types of things that can help them. And don't forget that creditsuite.com/EIN to grab that free guide.
Yeah, okay. We'll certainly link that in the show notes. Ty, you've certainly opened our eyes to a whole new world out there, and we look forward to implementing these things and learning more. So thank you for coming on the show today, and we wish you the best.
Jacob, thank you so much for having me. I had a blast.
Thank you, Ty. Take care. All right, that wraps up our interview today with Ty. Last week, we discussed the importance of using leverage or other people's money to grow your real estate portfolio and passive income stream. Ty has given us yet another way to intelligently use debt to buy real estate and grow your business while eliminating the need to use your personal credit. Ty has coached real estate investors just like you how to grow their business. For more information and resources, visit Ty at www.creditsuite.com. As always, if you have any questions or comments or want to hear something or someone specific on the show, reach out to me. You can contact me at www.jacobayers.com or connect with me on Facebook at The Real Estate Way to Wealth and Freedom. Till next week, signing off, I'm your host, Jacob Ayers.
You've been listening to the Real Estate Way to Wealth and Freedom podcast, providing you actionable content to build your real estate empire. Nothing on this show should be considered specific, personal, or professional advice. Please consult an appropriate tax, legal, real estate, financial, or business professional for personal advice. The opinions of guests are their own. Information is not guaranteed. All investment strategies have a potential for profit or loss. The host is operating on behalf of the Real Estate Way to Wealth and Freedom, LLC, exclusively.